Hello and welcome to Resources Rising Stars' first virtual investor luncheon presentation series. I'm Paul Armstrong from Reed Corporate. Thanks very much for joining us today. As many of you are aware, Reed Corporate and Nicholas Reed and I have been running these investor luncheon series around Australia now for more than 10 years. It's proved to be a very effective format, basically 3 or 4 company presentations to give investors an opportunity to hear directly from those running some of Australia's most successful resources companies. Usually these lunches are accompanied by a lovely 3-course lunch with beer and wine. Of course, I know you need no reminding, we're unable to do that today due to the coronavirus restrictions, but we do aim to achieve our overall objective at Resources Rising Stars, giving investors an opportunity to hear directly from those running resources companies. Before we move on with today's presentations, a little reminder about our annual conference. I know many of you are registered for our conference on the Gold Coast. Usually that's in May. We've just deferred that now until November 10th and 11th. 2 days of presentations from a whole range of resources companies. It's free for investors to attend. We'd love to have you there. If you haven't already registered, please go to our website and I'm sure you'll get plenty of valuable information in 2 great days, along with lunch and morning and afternoon tea and networking drinks at the end of the day. All going well, we hope to see you up on the Gold Coast on November 10th and 11th. Also, a little reminder about our weekly wrap. It's a free service for investors, a newsletter delivered into your inbox every Friday morning. It contains a summary of the key resource company announcements during the week, and of course, the very popular column written by Barry Fitzgerald, Australia's most experienced resources writer, along with a fantastic column from Tim Tregold, a veteran finance commentator who brings you so much of the information in the small and mid-cap resources space that you don't get from the mainstream press these days. If you don't already receive that free newsletter, again, please go to our website and we'd be delighted to arrange to send it to you every Friday morning. Moving on now with our first presentation, BELLEVUE Gold. BELLEVUE's had a spectacular stint as an explorer, establishing a 2.2 million ounce resource at a whopping 11.3 grams a tonne at its WA gold project. The company is now moving into development phase with a whole host of news flow pending, including its maiden indicator resource. To tell us about where the company's up to and the news flow coming, please welcome BELLEVUE Managing Director, Steve Parsons.
Great, thanks very much for the kind introduction there, Paul, and thanks very much to Reed Corporate today for the opportunity to present BELLEVUE Gold. So I'm going to tell you a little bit about BELLEVUE and the exciting exploration discovery that we've recently had over the last 12 months and growing the resource to over 2 million ounces of gold at a very, very high grade of over 11 grams per tonne. And 2020 is going to be an exciting year ahead for us as we now continue to grow the resource, and you'll see resource growth coming out very, very soon, and as we move it towards development and ultimately into production as well. So exciting time ahead for us. The normal disclaimers to read in your own time, and these are on the ASX platform. So as I said, it's an exciting discovery for us. We've literally drilled our first holes onto this project only 2 years ago. We've now grown it to be over 2 million ounces of gold at 11.3 grams per tonne. The resources have grown consistently, and we expect them to continue growing at the same rate of knots as well. The resource is open very much to the north and to the south. It's open at depth as well, and we've recently had a new discovery called the Deacon Lode, which sits in the footwall of the original discovery as well. And this is very much open north-south, up dip and along strike as well. So exciting times as we continue to grow the resource. We currently have 4 drill rigs on site at the moment, so plenty of news flow. You're going to be seeing an updated resource coming out this quarter as we move towards the middle of the year, and that will be including our indicated category for the first time. So the resource not only growing in size over the last 2 years, but also now growing in confidence as we move it towards the next stage of development. And in the background, we have a very large land holding. There's 3,500 square kilometres of tenure here, of which we've really only explored a very, very small portion of this. And 2020 will be the year that we start stepping out and looking at some of these new areas to the north and around the old workings as well. And we certainly have a strong cash position for us to be able to do that with over $30 million in the bank at the moment, and certainly a clear path and a clear runway forward all the way through 2020 and into 21 for next year as we continue to grow and de-risk the project, moving it to the next stage. So there's certainly some real standout things for our project, of which we certainly have had this consistent resource growth, and as I said, you'll expect to see that continuing to grow, and with the 4 drill rigs that we have on site, there'll certainly be infilling and increasing the resources. The grade is certainly a real standout for us as well. One of the highest grade ore bodies in Australia at the moment, and if not one of the highest grade ore bodies globally as well. We're very fortunate on this project as well in the fact that we have a very high success rate of downhole EM conductors that correlate to very high grade gold. So what we do is downhole EM testing, and every time we have an EM conductor, we have pretty much 100% correlation with high grade gold. So this has enabled us to have very cheap discovery costs of around about $15 Australian an ounce, which is certainly one of the lowest in the industry. And we certainly have a number of EM targets that sit outside of resources that you will see us continuing to step out and drill, of which gives us high confidence that the resources will continue to grow at the same sort of grade and rate of knots as well. And also one of the real standouts for the property as well is that we have this 28 kilometres of underground development sitting there from surface down to about 400 metres depth that we're currently dewatering as we speak. And I believe we're down to about almost 200 metres below surface at the moment. And this will be the platform for us to be able to drill from underground. And so again, second half of this year, you'll be seeing announcements coming out on that as we move our drill rigs from surface to underground, and we continue to step out and add further ounces. And we are blessed as well with the metallurgy. It's very good metallurgical recoveries that we have on this property with a high portion of gravity gold. And as I said, certainly cashed up with well over $30 million in the bank to see us through for 2020 and into 21. As we continue with discoveries and resource growth, we continue to move towards development, and you'll be seeing economic studies coming out in the second half of this year. And as we move ultimately into production, we should see some news flow on that in the second half of this year as well. One of the other real standouts on this property as well is that it's an Archean low gold system, and I'm sure many of you are familiar with Archean low gold systems and the size of these. We're very fortunate that these deposits typically go for a very, very long period of time, decades in fact. And on the slide, you can see a number of examples that are pretty much around where we're located. And one of the real key things to take away on this slide is that we really are just scratching on the surface and targeting down pretty much in the top 500 metres from surface. So very much open at depth. You'll see that resource growing in that top 500 metres as well. And very much as we get underground and start drilling deeper, you'll see that resource growing as well. And we expect to see it move towards some of these other big deposits that are in the region, in the Goldfields region of Western Australia. A quick snapshot of the company. So we're ASX 300. We've got 682 million shares on issue, and as I said, the cash balance is well above $30 million. We have a very, very strong institutional shareholder base as well. That shareholder base is split up with about half from North America and Europe and half from in Australia. And I've listed out there some of the stronger, larger global institutions that are on our register as well. Staff and board and management own a chunk of the company, and we see that as very important. We encourage our staff and management and board to own shares and to support the company. And of course, the share price graph has been very good over the last 2 years, and we expect that to continue in an upwards trend as well. And that's going to be based on the fact of further discoveries, and as we move the project into development and ultimately production as well. And we've been very good at what we've done, and the fact of discovering ounces to date. You can see on this slide, it's very much consistent resource growth. Your drill rigs on the ground. The last quarter, we had 8 drill rigs turning. We're now finished on our maiden indicated drill program, and you'll be seeing our maiden indicated category coming out very, very soon. And one of the fortunate things that we've been doing as well with the geology is very much using diamond drill core. This gives you a very high confidence level on the geology and the understanding of what's going on with the ore bodies. And so you can see here that we have, moving up to 150,000 metres of drilling undertaken since we took on the property less than 2 years ago. And we expect to be doing another 150,000 metres this year as well as we move it to the next stage and as we increase those resources as well. Today we announced that 2 more board members have come on board. We're very happy to have Fiona Robertson and Shannon Coates join us. both independent, non-executive directors, and as I said, as we're moving towards the next stage of into development in ASX 300, it brings a strong new skill set to the board. It also brings a strong corporate governance for us as well, and of course independence as well, as you see us moving the project to the next level. We have a great executive management team as well that you've been seeing that's been building over the last few months as well. We've recently been joined by Luke Gleeson, who's Head of Corporate Development for us, who's come across from Northern Star, and we're over the moon to have him join us. We also have Craig Jones, our Chief Operating Officer, who came across in December of last year, and he's the man who'll be taking the project through to development and ultimately production for us. Sam Brooks, our exploration manager, has been with us since the start and has been instrumental in the discoveries to date to the 2.2 million ounces, and you'll see that continuing to grow under Sam's leadership. And we're also over the moon to have Diana join us as well as Head of Human Resources and also promotion and company culture. And this is, of course, important as we move towards the next stage of development and ultimately production, as we build that team with the people that we need for the next 12 months. So we're in a fantastic location here in Western Australia. We're surrounded by giant gold mines, all within about 150 kilometres of us. So we know it's a very high, gold producing region. We're very fortunate in the fact that we have granted mining licenses, which enables us to get up and running very, very quickly. And we're also very fortunate that we have a whole bunch of infrastructure on our property and near us as well, with large towns and mining companies nearby. So very, very, a good step ahead to get the project to the next stage. One of the real key standouts for our property is this 28 kilometres of underground development that we have sitting there from when the mine historically produced 800,000 ounces of gold at a fairly impressive 15 grams per tonne. Our resources sit all outside and around that area, and so we currently see this as a major opportunity for us to get underground, to move us towards that production. The ore bodies sit within only metres of that development, and so this really is something that can push us very quickly forward into the next stage for us and enable us to do it in a very cost-effective way as well. So watch this space for news flow out on that in the next few weeks, and certainly a lot of news flow on that we expect for the second half of the year as we move it to the next stage. The geology, as I mentioned, it's a classic Archean lode gold system, typical of most of the styles that you see here in Western Australia. It's multiple lodes, which we're very fortunate to have, multiple phases of gold mineralizing events as well. Typically, you have steeper mineralization with cross-cutting the flatter lodes as well, such as the Viago lode, which has some very, very high grade, and also the Deacon lode, which is our new discovery, which we're very excited about, and you'll see that continuing to grow over the next 6 to 12 months as well. And one of the interesting things on this slide to take away, it's a cross-section looking through the ore bodies. They stick out from surface, so you will be seeing, once the economic studies are well and truly underway, you'll see us announcing about how we expect to see high-grade open pittable material before we go underground. And the other thing to take away on this slide is that a large portion of this area marked up in the dark brown colour has never been drilled. So a huge area that has never had a drill hole into it, and the areas that we have drilled have so far found 2.2 million ounces of gold. And looking in long section now at the deposit, you can see the various lodes that we have, as I said, sticking out from surface and drilled down to only about 500 metres below surface and very much open north, south, and a footwall and hanging wall. Our most recent discovery was the Deacon lode, which sits in the footwall of the Bellevue lode. We've currently only drilled that over 900 metres of strike. And so far 400,000 ounces of gold at 12 grams per tonne in that, and you'll see us continuing to step out on that and growing that as we drill it up dip and to the north and to the south. The focus since December quarter last year through to only a few weeks ago with the 8 diamond drill rigs that we had on site was very much infill drilling. So we've taken the inferred resource category down now to 40 by 40 metre drill pattern and 40 by 20 metre drill pattern. And you can see that marked up in red on this slide, this long section through the deposits. And so the maiden indicated resource will be coming out on those areas, all drilled with diamond drill core, very high confidence level. And then the areas marked up in yellow will be where the second resource for indicated category will be coming out later in the year. And as I said, the resource is very much open, so it's not just about moving it into the indicated category and moving into development. This is one of the exciting exploration discoveries that's happening for gold in Australia at the moment. And so we're certainly keen to keep those drill rigs turning as we step out both north, south, and in the footwall and hanging wall. And we have a number of downhole EM conductors that we see as very high priority targets that we're going to be drilling over the coming weeks and months. And this really is what I've just been speaking about for the last 10 minutes is very much only a very small portion of our overall land package. So everything that I've spoken about to date, that 2.2 million ounces of gold, sits in the little red oval at the bottom of this air photograph that you can see here. We have 20 kilometres of strike potential on the property, with the Bellevue Shear continues on to the north. We currently have people on the ground at the moment doing soil sampling, geophysical testing, EM surface sampling, and we currently have a drill rig on site up on one of the regional targets as well. So we're hoping to bring out some good news on that over the next few weeks and a few months as we look to find the next Bellevue deposit as we step along that strike of 20 kilometres to the north. So it really has been an exciting couple of years for us since we drilled that very first drill hole in Christmas 2017 and started drilling in earnest in January 2018. This year we've ticked the box of getting us ready for the indicated category that'll be coming out, as I said, this quarter that we're in right now, towards the middle of the year. You'll see us continuing with the 4 drill rigs on site as well, and those 4 drill rigs are very much stepping out as well as infilling as well. You'll see that then come into how the dewatering is going. You'll see us moving to the drill rigs being underground and moving us towards development and economic studies in the second half of this year. So an exciting time ahead for Bellevue Gold. Thank you very much for your time.
Thanks very much, Steve. A couple of questions that people have sent in to us during your presentation. One of them being, do you believe there will be consolidation in the Australian gold sector? And if so, over what period? In the short term, or will it take a little longer to play out?
Yeah, well, I think one of the things about the industry at the moment is, and you're seeing it globally over the last few years, there certainly has been consolidation happening, without a doubt, as companies look to grow their resource base and grow their production. And so I'm sure that will continue to happen. In Australia, we have been seeing those things going on, and I'd expect to see them continuing to carry on as well.
And you mentioned during your presentation, Steve, that you're about to start economic studies on the project. What are some of the things about this project or about this deposit that make you feel that the economics of this project will be so strong?
Yeah, so great question, that one, Paul. So it's an exciting time as we go from being, just purely exploration to now not just exploration, but also development and into production. So, some of the things that will prove that this will be, that should be, a highly profitable gold operation. And of course, we have to wait till our economic studies are completed and get out to the market. But grade is obviously very, very important on these things. Grade means typically for, high grade deposits that all-in sustaining costs are typically lower. Also with high grade projects as well, it means less capex is required because plant size is not needed to be as big. We're very fortunate where the project is located. We're right on the state highway heading north, just out of Kalgoorlie, major gold mining district. So, there's certainly, that should keep costs down on development and capex costs as well. So I think there's certainly plenty of things going for the project to show that this should be one of the standout projects in Western Australia.
Thanks very much, Steve.
Great, thanks very much.
And that is a fantastic story, as you heard, with a lot of action to come. Moving on to our second presentation today. Chalice Gold Mines is the proud owner of one of Australia's hottest new mineral discoveries. The Julimar Nickel Palladium project in WA has returned some spectacular results in recent weeks, turbocharging the company's share price. But as we're about to hear, things are really only just warming up there. To tell us about the results so far and the plan from here, please welcome Chalice Managing Director, Alex Dorsch.
Thanks very much, Paul, and thanks to the team at Reed Corporate for inviting us to this event, and thank you to you all for tuning in today. So as Paul mentioned, it's a very exciting time for the company, so it's a great time to update everyone on where we're at. The normal disclaimers, these are available on our website if you'd like to read these in your own time. So for those who haven't heard of the company, Chalice is a fairly unique, well-funded business with a proven ability to acquire assets at an early stage, make discoveries, take those assets up the value curve, and also monetize in a disciplined manner. And the history of the company is very strong in this regard. We've created a significant amount of value and also returned a substantial amount of cash to our shareholders. And that's given us the treasury to think very big and very long term on the assets we get involved with. We currently have 25 million in working capital and investments. We haven't raised any capital on the market since 2011. That, for those who are aware, we are in a trading halt at the moment. We are going back to the market for $30 million at $1.05. That will be the first time we have gone back to the market in some time. And really, that the catalyst for doing that is the new discovery we've made at Julimar, and it's really one that we want to be prepared with a position of real strength and financial strength to take that project forward in a rapid manner. So our treasury and our capability allows us to hold a very large portfolio of very large holdings, and we have the very well credentialed people running our exploration efforts. So our three key projects in Australia, obviously our recent discovery is the one that's really captured the market's attention at Julimar. It's only about 70 kilometres northeast of Perth here. It's a first hole discovery. Now about 8 weeks ago, we hit a very high grade shallow nickel copper PGE sulfide intersection. It's in a brand new province, so the upside on this project looks absolutely fantastic. And the optionality is also very good for us. We own 100% of that property, and it is essentially completely unexplored ground. So it's a very exciting project. We have two other projects which we're continuing work on that arguably could stand on their own feet in any company. We have a brand new or recently discovered greater than 4 kilometre long gold trend that we've defined in Victoria. And we currently have 2 diamond rigs running on that property at the moment. We're one of the largest holders of exploration license in Victoria. And again, it's all 100% owned by Chalice. The King Leopold project as well in the western part of the Kimberley is a part of the world, again, that's a very much a frontier area. So again, we have a large holding in that part of the world. And that is the common theme with our projects. We like to really dominate the provinces we're involved in, and yet really step up the exploration efforts and explore in an aggressive and systematic manner. We have a very tight capital structure and a strong financial position. Our insiders speak for a large quantity of the register. Our chairman holds 17% of the company. We have a very large institution based in San Francisco who owns 11% of the company. And in our current capital raising, we're getting very strong demand from institutional investors, which is fantastic. There's approximately 275 million shares on issue at the moment, which capitalise us at about $300 million. And as you can see on the bottom right there, our share price has responded exceptionally well to the discovery. It is still early days for this project. We believe there's a lot of growth yet to come. So the project, as it shows you there on the map, is just outside of Perth here in Western Australia. It was a high-grade discovery with the very first drill hole. And I guess since that first drill hole, we've uncovered what looks to be a very remarkable new discovery in a completely new province for the state. So it's approximately an hour's drive out of town here in Perth, which means that it is exceptionally well located in terms of infrastructure access and logistical support. It is a layered ultramafic complex that we believe strikes over 26 kilometres. And we staked this ground in 2018 on the basis that conceptually we thought it could be prospective for magmatic sulfides. And now we've obviously confirmed that it is very, very prospective for those metals. Quite unbelievably, it had never been explored for those metals previously. So that I guess makes it extra special. We did a program of early stage exploration to get to the point where we were ready to drill a hole in March of this year. And that led us to drill our discovery hole and hit the high grade zone that we did. We've then expanded our license holding substantially with over 2,000 square kilometres of new applications in the area. So we've very much cemented our position in the province. So our first drill hole targeted a strong EM conductor, and that delivered the result as it's shown there on that page. 33 metre wide high grade zone, grading 6.5 grams palladium, 1.6% nickel, and 0.7% copper. And that was quite special, I guess, because it was in fresh sulfides at 44 metres downhole. So it's quite unusual to hit that sort of zone so shallow, and it was essentially a brand new discovery in a previously unrecognised intrusive complex. We've subsequently gone and drilled now 15 drill holes around the intrusive, and in doing that, we've discovered that there's 2 parallel high-grade zones that we know about to date, and every single drill hole we've drilled into the intrusive comes back with mineralisation. We're getting plus 100 metre intercepts with PGE mineralisation, which we view as highly encouraging. And this establishes, I guess, a new magmatic sulfide province, and certainly a pretty remarkable discovery. A zoom in here on our 2 parallel high-grade zones. The second zone, the eastern zone, is listed there. The discovery intercept for that zone, again, not quite as high grade as the first hole, but a stunning intercept nevertheless. We've established at the moment that there's at least 200 metres of strike extent to the zone, and we have an untested anomaly immediately south, about 200 metres to the south, that we're now targeting as you know, where to grow these high grade zones. We've also, in the process of hitting the high grade zones 200 metres to the north, we have established that there is mineralisation down to approximately 450 metres below surface. So it appears that this is not only a widespread laterally mineralisation, but there appears to be a good depth extent to the ore body as well. Diamond drilling is continuing at the moment, and we're about to start a comprehensive 2-rig RC program as well. We've got a squid EM program underway at the moment to, I guess, give us the next level of resolution on our geophysics, and we are awaiting all assays on our 3 initial diamond holes. Some of those, the core from those initial diamond holes are shown there on the right-hand side. As you can see, very well-preserved sulfides, very close to surface, and you can see there that those widths are appreciable. So they're 2 steep westerly dipping zones, and they remain wide open, certainly along strike and down dip. The intrusive, we believe, has a chonolith type of geometry. We're inferring that geometry from the magnetics. We believe we've gone some way to verify this interpretation with the deep diamond drilling we've done to date. The dimensions of the system are quite substantial. So about 1.6 kilometres long, about 700 metres wide, and about 650 metres deep, which is a very large scale target. It also, the geometry and regional geology here have some similarities to some very significant discoveries and magmatic sulfide deposits globally, including the world's 2nd largest deposit of this type called Jinchuan in China. And I think the most enticing thing about this project is that there's a further 24 kilometres of the complex that we haven't yet accessed and we haven't yet explored, and we're going through that process now. So we've uncovered some very limited historical sampling work that was done in that state forest area immediately north of our discovery. And as you can see there, the magnetics are quite prominent as they strike to the northeast through that area. we've got some highly anomalous soils and stream sediments in that area for both nickel, copper, and PGEs. So we say, I guess we're inferring a very, very high priority target for us and a hugely exciting degree of upside to this project, given that those soil anomalies are up to 10 kilometres away from our current discovery. So that is a truly special discovery for the company, and has really, re-rated the valuation of the company, and obviously, as you can see, a lot more to come. Now, I guess any company would be happy with that project alone, but as well as that key project, we've got a very large land holding in Victoria, as I mentioned. So we are looking for another Fosterville type of deposit in Victoria. We're exploring in the northern part of the central goldfields in Victoria, essentially in a part of the state that is completely unexplored. And I guess the reason why I guess this is such a hot part of the world at the moment for exploration is what was achieved by Kirkland Lake at the Fosterville gold mine. So a very large new discovery was made there, approximately 3 million ounces at approximately an ounce per tonne, which is very, very high grade. And it's made Fosterville one of the most profitable gold mines in the world. We've adopted a very much a systematic regional scale approach. We've been drilling now continuously for essentially 2 years. That's narrowed us down to 2 target areas called Carry and Ironbark. And we've essentially started our first test of those 2 targets at depth a couple of months ago. Our first target, Carry, strikes over 4 kilometres, as I said. So this figure here shows you the gold anomaly that's we've got from limited air core drilling. As you can see, the length from north to south there, 4 kilometres, and we've drilled one. We've got results from 1 diamond hole thus far, and that diamond hole went straight through a primary gold zone, 11.5 metres at 1 gram gold. Which we think is a highly encouraging result, given that it is essentially a blind target that we were drilling. So we believe there's a very good chance that a significant gold system exists here below this anomaly, and that's why we're continuing to drill with 2 diamond rigs at the moment. And I guess for context, why do we think a 4 kilometre long continuous gold anomaly is so significant? I guess the Fosterville gold mine strikes over about 4.5 kilometres. And approximately 8 million ounces came out of that 4.5 kilometre strike length. So we think that the size of the prize here is obviously very significant, and certainly if you can find a high grade lode like Kirkland did at depth there with the Swan Zone, we believe that will be obviously very substantial. The other target we're drilling, and we'll be drilling 2 additional holes into shortly, is called Ironbark. We've done limited air core drilling on this target to date, as well as 1 diamond hole into the northern intrusion. We're looking at 2 prominent magnetic features there that we believe are quite compelling drill targets, and quite simple drill targets. So we're looking to drill an additional diamond hole into each one of these intrusive bodies. And thus far, we've got reasonable gold grades in that limited drilling, which leads us to believe that these could be quite significant company-making types of discoveries in their own right. So that program is about to commence. This is what our forward plan looks like for the next few months. We've scaled up our activities significantly at Julimar, as you'd expect. We've got a squid EM program ongoing at the moment on the property, as well as some soil sampling to really expand and tighten up our coverage there. I mentioned RC drilling. That's about to commence again with 2 rigs later this month, and we're looking really to scope out the entirety of the large scale system with that phase 2 RC drilling program. We're also continuing on with 1 diamond rig drilling on the Gonville discovery at the moment. And very importantly, I think as well, we're kicking off initial mineralogy and preliminary metallurgical work to really, I guess, get a sense of how this discovery may perform in terms of processing. Also, there is listed the time frame for us in Victoria. So we think it's a compelling investment proposition. The new discovery we've made has substantial scale potential. And it's a very well located project. And obviously, on top of that, you get exposure to our early stage activities in Victoria, where we've got this quite exceptional looking target there. That's a long strike from a number of world-class gold deposits. As I said before, the company has a track record of creating value. We do have a strong company, and we post capital raise at the moment we're intending to be even stronger. So thank you very much, and great to present today.
Thank you very much, Alex. You mentioned you're in the market raising some money now. What's the reaction and response to your presentations and chats with investors about that raising?
Yeah, thanks, Paul. We've had exceptionally strong demand from both Australian as well as international, institutional as well as strategic investors. Quite prominent international investors, which is great. So we're expecting that. Yeah, look, it's looking like it's very well supported.
And in WA at Julimar, some spectacular results as you just went through. Some very strong nickel results and some strong palladium results. An unusual combination in Australia. What should investors make of that? Is two better than one? Is it great that they're both going to be components of the new lithium battery industry? How should investors interpret that those combined results?
Yeah, look, it's a good question. PGEs are something a little bit new for Australia. There's no primary producing PGE producing mines in Australia. They are typically produced as a byproduct. But as you said, like both nickel and PGEs have a very strong underlying demand profile, and a lot of that is due to the electrification, particularly in transport. So electric vehicles, as well as arguably the next technology, fuel cell vehicles, are very well positioned, I guess, for the nickel and PGE thematic. So some very strategically important metals there. That we have in that discovery.
And it's probably fair to say that some of those spectacular results have stolen the limelight from your Victorian campaign, which was really building up a head of steam until Julimar came along. Going back to Victoria, I wanted to ask you what your instincts were telling you about that, but that's probably outside the stock exchange listing rules. I don't think instincts are part of the JORC code, are they? So playing within the rules of the game, what do the results tell you about the potential in Victoria?
Oh, look, we're hugely excited. I guess it goes without saying that 5,000 square kilometres is a huge land area, and there's a huge holding for any company. And we think there's not just one discovery to be made there, there's multiple. So that's why we're continuing both projects in parallel, and we're looking to really, continue what we do best, which is, I guess, high quality exploration. Yeah.
Thank you very much, Alex.
Thanks very much.
Thanks, Alex. And a fascinating story. Drilling is one of the best means of creating value for shareholders in this business. And when it comes to Chalice, there's drilling going on everywhere. Moving along to our third presentation today, Bardoc Gold. Bardoc is building a substantial gold business in Western Australia. It's established a 3 million ounce resource, and a pre-feasibility study finished a few weeks ago confirmed the potential for a 135,000 ounce a year operation in Western Australia. To tell us about that project, please welcome Managing Director Rob Ryan.
Thank you, Paul. It's a pleasure to be presenting here, and it's another wonderful event put on by the Reed corporate team and RRS. So a few investment highlights of Bardoc Gold projects. We've got 3 million ounces just outside of Kalgoorlie. It's a fantastic place to be developing a gold project. It's well supported by the local community, and there's significant infrastructure already in place within the area. We've got a large and growing mining reserve, so 790,000 ounces of mining reserve puts the Bardoc Gold project as one of the best undeveloped gold projects in Australia. Over the next few months, we're going to have continual news flow as we look to develop this project and push through the definitive feasibility study. We'll have the resource update in Q3 of this year, with the ultimate aim of finishing our DFS by Q1 of next year. That'll give the company a clear line of sight and be able to raise the funding needed to be able to become one of Australia's next mid-tier gold producers. And we've got a strong board and management team with the experience to really do that. So with the ex-board of Pilbara Minerals really spearheading the operation, and a strong management team with extensive operating experience in the goldfields. We think we've got the right mix between exploration and mining production to be able to make a profitable gold mine. And where we sit in comparison to a lot of our peers, and why we make such a good investment opportunity for all the listeners out there today, is when you look at us on an enterprise value per resource ounce, we're significantly undervalued, and we haven't got the re-rating that really what our PFS deserves because of the COVID-19 crisis. Now, we're probably around 20 to 40% undervalued in comparison to a lot of our peers. And what we see as we start going through the development profile and start approaching through financing constructions, companies get a significant re-rating. So you'll see some of our peers upwards of $150 per enterprise value per ounce, and much lower grades than what we have in our resource. And we have the exceptional opportunity for growth as we go through the development process. And when we look at the enterprise value per reserve ounce, and this isn't a slide that really does Bardock justice, because when you see the grade at 2.6 or 2.4 grams of our reserve, it's much higher than all of our peers. When we start having a look at the valuations, it's significantly lower. So we still believe there's exceptional opportunity to grow that reserve number. So the valuation for potential investors is huge. So as I said before, the board's led by the ex-Pilbara Minerals team, so Tony Leibowitz as chairman, Neil Biddle and John Young, who had tremendous success with Pilbara Minerals, taking it all the way through from junior developer, financing, construction, and into production. We've got the right mix on the board, so once we get into production, is to be able to really drive this into a profitable operation. Rowan Johnson is the ex-MD of Excelsior Gold, as well as having strong experience with Integra and Mutiny and a few others. Myself, I'm a mining engineer by trade. I've been running gold mines in the Kalgoorlie for the last 10 years and living and working in Kalgoorlie Boulder for the last 18. So I know the area well, and I think we're well placed to build a mine and make it a success in the Kalgoorlie region. And there's no better place to be building an operation than Kalgoorlie. 40 kilometres north of Kalgoorlie, we're well placed. There's a residential workforce. We're close to road, rail, power and infrastructure. So for us, really the development opportunity here really puts us in a successful position. And we've been consolidating, and probably a large reason why we are undervalued and why we have flown under the radar in comparison to some of our learned colleagues here who have had significant success in exploration, is we've taken a different route about acquiring gold assets in the Kalgoorlie Boulder region, pulling them together and really forming a 40 kilometre, 250 square kilometre of tenure that is well endowed, 3 million ounces of resource with still significant exploration potential. A lot of the tenure in the area hasn't had any modern exploration conducted over the last 20 years. So we think there's significant upside to be able to not only grow our current resources, but also find new resources. And where we start having a look at the location of our tenure is located on the Bardock tectonic zone, which is essentially a continuation of the Golden Mile, which hosts the Super Pit and St Ives and the like. We also have the interaction of Black Flag Fault, which comes up from Mount Pleasant. Now, Mount Pleasant hosts around 5 to 6 million ounces of total mineral endowment. So what we have here is two major mineralised corridors joining where our tenure meets. We've got around about 3 million ounces delineated here. We think that there's significant potential for us to expand upon them. And our PFS results show that already we have quite a significant project in its own right. With a 7.8 year mine life and 7-year production life, all-in sustaining costs of $1,220 an ounce, which is definitely at the lower end of production when you start looking at a lot of mid-tier companies on the ASX. The production rate would be 1.2 million tonnes per annum, a total mining inventory of 1 million ounces, and we expect to significantly grow that through resource development as well as exploration. When we look at a PFS study, we've only really focused on our key projects of Aphrodite, Zoroastrian and Excelsior. When we start having a look at some of our resources outside of there, latest discoveries and resources at Mayday, North Kanowna Star, and a lot of our other satellite projects, We haven't included those in the PFS because we believe that we wanted to show how robust this PFS was with just our 3 core deposits, and we'll look to develop the significant resources as we go through this process. What that's going to give us is not a project that's going to have a 7-year production life. With the ultimate target for us will be to get to 8, 9, 10 years and start looking, once we get into production, being a long life, sustainable operation. When we look at our mine plan, we've got nearly 800,000 ounces of material, indicated material in our mine plan. For us, that's given us the opportunity to start talking to financiers, and we'll start developing now a sheet and a track to go out to banks and start looking at financing and really try to get this project finance ready for as soon as the DFS is complete. And when we look at the PFS, it's significant value when we start looking at the current gold price. So at current gold prices, we got pre-tax cash flow there of nearly $1 billion. And when we start looking at our post-tax NPV of $500 million and an IRR of 51%, it's a fantastic investment opportunity, and really there's no better time to be building a gold mine. And our Aphrodite deposit, although it's 1.7 million ounces, still has the potential to grow. And with 500 ounces already in resource, 500,000 ounces already of that resource converted to reserve, there's still significant opportunity to continue to grow the reserve within that operation. We're looking at the underground and open pit, and we're doing a number of trade-off studies now. You'll see here with the $2,000 an ounce pit shell, the significant scope to expand that open pit, as well as having a look at the underground. And Zoroastrian's our cornerstone deposit. It has had some fantastic grades there over the last 2 years. And when we start looking at the infill drilling results and the upgrade results, 7 meters at 21 grams a ton, which was released a few weeks ago, really does show the potential of this operation to produce significantly higher grades. Now, with the resource modelling, we've always been on the conservative side at Bardock. With the project, when we start looking at the bottom of the Zoroastrian open pit, the resource here was mined supposed to be about 4.5 grams a ton. When that went through the plant, that reconciled at about 6 grams a ton through the Lakewood mill. So there's fantastic upside that what we see in our resource modelling here to be able to add value once we go into production. And there's still the room for growth. As well, we looked at a small open pit in the PFS here, which was really a starter open pit. We wanted to focus on the underground as an operation and get the underground up and running. We will look to exploit the remaining of the open pit resource after the underground. And when we have a look at the $2,000 an ounce pit shell, there's a significant open pit material there. So the whole point of our PFS was really to take the conservative line, push through what is already a robust project, and now we'll look to grow those production numbers once we start moving into DFS. The Excelsior open pit is quite prominent to note here. Excelsior Gold used to quote a resource of around 475,000 ounces on this open pit. Bardock currently quote a resource around 320,000 ounces. So this is quite a significant point for the company, because we've developed LUC models, we've conducted a number of de-risking milestones within the resource modelling. So when we start going into production and where we see some of the challenges other mining companies have faced in the past once they've gone into production, we think we've got those covered off, and we'll only see upside when we start going into mining some of these deposits. We've got a simplified flow sheet. The idea is we'll have a CIL circuit that will lead into a flotation circuit to produce a gold concentrate. The gold concentrate for refractory material really takes the risk away out of building a high-cost, high-capex production scenario. And we think with a gold concentrate, it's a burgeoning market where we have a number of traders trying to get a hold of us to really increase their book of their gold concentrate sales. And it's not a new technology, and it's not a new pathway that companies have seen in the past. Evolution have been in operation at Mount Carmen since 2013 under the same circumstances. Mandalay Resources, a TXX listed company, in Victoria have been in operation since 2010. And then we have a look at diversified minerals who have just developed a project in New South Wales under the same methodology. Our DFS, there's some key milestones to look at, which will be the resource update in Q3. We'll plan to do our met test work and have our concentrate offtake arrangements in place by the end of this year, as well as having a look at our final DFS and environmental studies by Q1. Our ultimate goal is to go mining here, and we believe with the high quality we already have in our reserve, we'll be able to start talking to financiers and really get this project ready for construction and production by Q3 next year. And there's still opportunity to grow. I spoke about Mayday. Mayday is a beautiful ore body. You can see here it's open along strike and at depth. It's a thick, consistent grade. Every time we drill it, we hit mineralisation, and it's just consistent. You'll see the mineralisation here. It's 12 metres at 2.4, 14 metres at 2.96, but it's consistent, it's repeatable, and we think we'll continue to grow this resource well past the 170,000 ounces we have in our exploration target. North Kanowna Star, this is an interesting prospect because we were really the first company to drill below what was a 30,000 ounce oxide resource. Once we got down to the fresh, if we use a lower cutoff, about 0.1, 0.2 of a gram, we were getting 45 to 50 metres of continuous alteration. You don't tend to see zones like this. We're doing a number of geophysical surveys in and around the area. We could be 200 or 300 metres away from quite a big deposit. But the key focus for us is to develop this DFS, and we'll continue that over the coming months, and we'll continue to keep shareholders updated with our progress. The discovery, we still think there's ample opportunity here to have a new discovery within our own tenure, as well as growing our own resources. And when we start looking at the location of the Bardock project, it is within, there's no operating mill to the north of us until you start looking out to Leonora. So there's 200 kilometres effectively of ground out there that's owned by a number of junior exploration companies that don't have a processing option that really we see that we can take advantage of moving into the future. Thank you very much, and thank you for your time today.
Thank you, Rob. Just before you move on, a couple of your shareholders have sent us a couple of questions. One has asked if you have any thoughts yet about how you may fund the project.
So we've been doing a number of a bit of work with BELLEVUE. So BELLEVUE, our corporate finance consultant, they're having a look at a number of scenarios, really looking at around a 60-40 debt equity ratio. They seem to think that will have a DSCR around 2.4. So the economics of that from a standard banking debt are really promising for us. So that's given us the belief and the confidence now to go out and start talking to these groups and really start trying to get the project finance really before we release the DFS.
And another has asked if you've had any thoughts about a share consolidation.
We haven't thought about it in the past. We get good liquidity. We've spoken about it with the board and everything else. Yes, there's a lot of shares, but we haven't focused any on a consolidation at this point in time.
Thanks very much, Rob.
Thank you.
Moving on to our final presentation today. Gateway Mining is pursuing a large discovery out at the Gidgee Gold Project in Western Australia. The company has already established a 240,000 ounce resource there, and recent regional exploration review has identified several corridors which the company believes are highly prospective for new discoveries. To tell us about where the company is going to here, please welcome Managing Director Peter Langworthy.
Okay, thank you very much, Paul. Thank you, Reed Corporate, and thanks for everyone tuning in today. So I'll just nip through these. So really, straight overview, large gold project in Western Australia, 800 kilometres northeast of Perth. We think it's an emerging large-scale gold system. We've been through a process of consolidation of a large ground package. We've done that at very low cost. And we think it's a forgotten greenstone belt. Importantly to us, there's multiple mineralisation styles. We see this as a good thing, lots of different orientations. And last year we put together what we believe is just an initial resource of 240,000 ounces at a reasonable grade. We very much look at a systematic exploration approach, and that's backed up by the experience and the successful background of the management team. Just in the corporate summary, I guess the main takeaways there: market cap sitting around $15 million, a reasonable amount of cash for what we need to do at this point in time, $1.5 million in the bank. Top end of the registers, tightly held. Top 10 accounts for about 37%. And that includes directors that are around 20%. Just going through, I'll let you look at the directors there. I'll just draw your attention to Mark Cossum. Mark's been an addition to the team for about the last 6 months, and the impact on the business has been quite substantial. Looking at the project, really we think we're looking for large-scale gold camps. We're in a Tier 1 jurisdiction, large-scale Archean gold system, close proximity to multi-million-ounce gold camps. The only mining that was done here has been done in the late 1980s, early 90s, and really since then there's been very limited exploration history, and most of that hasn't really been too effective. As I mentioned before, we consolidated the land package, and we see that a program of systematic exploration will really be the catalyst to unlock the potential. It's worth noting too that it is an area that's under a bit of focus at the moment for regional consolidation. It's worthwhile just spending a little bit of time looking at the history and what opportunity that presents. So basically, it's trying to understand why has this area been so underexplored. As I said, Herald Resources mined a number of small open pits, late 80s, early 90s. Gold price environment, $500 an ounce. Herald made another substantial discovery further south at Sandstone, picked up the infrastructure and moved it. Gateway came in after this time, and over a substantial time put all the projects together. But it hasn't really been till 2018 that the consolidation of the area was complete, and refocus on gold exploration was undertaken. The strategy, I guess the word we like to use, is building a sustainable gold company. Certainly we've got a basis there of 240,000 ounces. We understand what we need to find to create that kind of business. We have a strong pipeline moving from the resource. We'll extend those. A lot of advanced targets, and as you'll see, we're developing new high quality targets all the time. Obviously, drilling is an important part, continuing to interrogate your data, and where applicable, building regional expansions to take up those kind of opportunities. We like to utilise good science, invest in quality, long-term data sets, and this makes sure that we drill when ready, and that ensures good capital management. So looking at the project itself, about 2 million ounce endowment in the general area. We've now tied up a coherent project over 60 strike kilometres. A lot of gold mineralisation along that corridor, and one thing that's good is a very good grade profile through the district. Previous explorers, they really haven't touched this. There's a lot of transported cover, but we've done some recent work, and the obstacles that previous people have seen, we don't think they're actually there. We've been in the area for probably 2 years working on the Montague granodiorite, and the learnings we've got from that we're now taking out to the rest of the belt. Low key, we've got a base metal opportunity. There's some pretty significant copper and zinc intersections to the project. That's for another time. And the thing I'm talking about quite a bit is investment in high quality core data sets. So looking at the project, that's a geology plan. You're looking there with all our drilling. Really, our key focus is the western margin of the Montague granodiorite. It's a 9 kilometre long structural zone, very heavily mineralised. Just for completeness, the eastern side, the geology is almost exactly the same, so another 9 or 10 kilometres, same geology, and that basically hasn't had an effective drill hole into it. So really, we have the feeling that we're onto a camp scale type opportunity. The best analogy geologically that we have is the King of the Hills or Tarmula gold deposit. that Red Hill are now developing, and that's a 4 million ounce gold deposit. The gold's associated with stockwork zones and also multiple high-grade shear zones. One thing that's very pertinent is looking at the effectiveness of drilling. What I did then was I just took off any drilling that was shallower than 50 metres. In fact, probably the majority of that is less than about 20 metres. It's interesting that at about 20 or 30 metres below surface, there's a bit of a depletion zone, and 80% of the previous drilling has stopped in that zone. So obviously need to drill deeper. Looking at Whistler, this is one of our resource areas, 120,000 ounces. The mineralisation is hosting granodiorite stockwork. It's open over about 900 metres along strike and remains open totally at depth. And the next phase of work we're doing there is targeting resource growth and actually looking for parallel new discoveries. If we look at the main Whistler trend, as I said, 900 metres. If we take it down to the Montague prospect, that takes that out to about 1.4 kilometres. This is all very, very shallow drilling, good widths, reasonable grades, and the fact that it's close to surface is obviously something we can chase up. Something that's just starting to, from our geological evaluation, is understanding the northeast controls on the mineralisation, and what that does is highlight numerous structures that we haven't even looked at this point in time. In addition to Whistler, there's some new targets, supergene gold mineralisation, very shallow, close to surface, on what we see as a major structural corridor at Armada. And the gravity work we've done is showing that the Whistler gold mineralisation probably plunges off to the north. This is a long section of the deposit, really just drawing attention to look at the geometry of what how the resource is captured, very much constrained by drilling. Plenty of scope to drill along to the north and to the south. And some of the highest grades that we've got in the deposit are at depth, and certainly that's going to be a target into the future for us. Looking at Montague, Montague is located just to the south of Whistler. Once again, there's a 120,000 ounce gold resource there. The mineralisation is hosted both in the granodiorite and the mafic rocks. We did some drilling there in October. The results were complementary to the work we've been doing on the resource, and we see there's the ability for that to continue to expand. It's totally open down dip. Along strike, 1.5 kilometres of strike north and south of the current resource along the granodiorite margin. There's some shallow drilling along the top of that, and what we have there is that what we do have is very anomalous. The thing that's really getting us excited once again is this northeast control. If you look through there, we've got half a dozen structures, very wide space drilling, very good thicknesses at very, very good grades, and these things are really new structures that haven't really been looked at, and certainly going to be a focus for us in the short term. Achilles, we just keep moving south. Basically what Achilles is, it's a combination of a number of old areas, 3 small pits. We see it as one sort of central area, complex series of mineralised structures. The previous drilling has been largely ineffective. Last year we went in and did a program of work and consistently hit thick, good grade mineralisation. Once again, I make the point that this is very close to surface, so a lot of this is oxide and transitional. We need to drill deeper. There's a large-scale stockwork zone that is located to the immediate east of this zone, so we're doing some analysis on that, and potentially there's some good supergene oxide mineralisation associated with that. To the immediate north, there's a 600-metre strike length up to what we call the northeast pit. Basically no drilling, very high priority target for us. There's an area there we call S-bend, and very thick, or good thicknesses, and very, very good grades. Off to the immediate west, the Caledonian trend, we've identified that over about 1.5 kilometres. Again, some very good grade profile, 3 metres at 15.7, 2 at 24, and that just remains open north-south, and there's been no testing under the historical open pit there. This is becoming a very interesting area for us. We call it the Southern Corridor, but basically what it represents is the southern half of the major shear zone. There's 4 kilometres strike length. Very, very little drilling has been done in it. Most of it is under about 10 metres, just very shallow reconnaissance work. The structure's the same, the geology is the same. We can just take the geological structural concepts that we've taken from the north and apply it to that area. The other thing we've done, I'll show you, is that we've just applied some very low-cost geochemical sampling, which has had major benefits. Just as an example, we've got a whole bunch of prospects that have been previously drilled, but not extended, and particularly understanding this northeast orientation that we're now aware of. Airport South, 500-metre strike length. When you join the two up in that northeast trend, best intersection, 23 metres at 13. Plenty of other wide intercepts. Again, this is all in the top 50 metres, never been drilled at depth, and totally open along strike to the northeast and to the southwest. On top of that, this is the work we've done with the geochemistry. Previously, explorers have thought that this technique doesn't really work here, and so we've just applied it, and we've come up with some major corridors that now need the next phase of exploration to be undertaken. Whilst I'm on geochemistry, to have a quick look at main prospect on the eastern margin, we call it Kashmir. So basically, we came in. It's worth pointing out, geologically very consistent with what we've seen at Montague and Whistler. The Howards deposit is not owned by us on our southern tenement boundary. That's a 200,000 ounce gold deposit. Structure goes immediately north into our tenement, and we've got a 1.8 kilometre very strong gold and silver anomaly. So that obviously is a major target for us going into the future. Stepping out away from the Montague Dome, there's an area out to the west of us, and what we're doing there is looking for oxide gold caps. There's a 7 kilometre long trend. It sits over the top of a VMS base metal system, and basically what we've looked at there is there a substantial oxide gold sitting on top of it. We've done a couple of programs there, and as you can see, very good widths, relatively high grade, and once again, very shallow, close to surface. I mentioned the copper earlier on. One of the prospects called Flame Tree, again, very close to surface, and you can see good thicknesses at reasonable grades. It is a big VMS system. It's not our focus. There's some obvious EM targets that could be looked at some stage, but we'll get around to that at the appropriate time. Stepping back out again, we picked up this big land holding for a purpose. We see the ability to go through and do first pass exploration, cheap exploration. We've got obvious targets to get into in the first instance. Multiple deposit types. I won't go through those, but really there's a couple of candidates for low-cost exploration techniques in the short term. It's worthwhile just looking at the regional dynamic. There's about 2 million ounces in combined resources in the district. Really hasn't had a lot of work done for a long time. We're centrally located. There's 5 large-scale gold operations within trucking distance, and most people probably be aware that there's some very active corporate dynamics going on in the district at the moment. Creating optionality, I guess this is driven by the fact that we want to be 100% focused on our flagship Gidgee project. What it does is gives us exposure to other commodities in other regions. Optionality is a big part of what we do. You can have a look. The companies we've got investments in: Alloy, Discovex, and Aurus Minerals, worth having a look at. Just coming up, just to finish up, the programs of work, we're getting back out in the field. We've been a little bit disrupted. Soil sampling commencing now. RC drilling will get up and going in June, go through into July, followed by air core drilling, and we'll continue to work on our quality data sets. So parting comments, prospective bit of ground. We've created a big project. We think it's going to be very well endowed. We've got a good technical team that's got a great success record, and we've got reasonable cash backing at the moment, supported well by the top end of our register. Focused. We love the Gidgee project, but we love the optionality, and we've continued to focus in on what we're doing. Thank you very much.
Thanks, Peter. If we could keep you just for a couple of quick questions that people have sent to us. First of all, you mentioned, you got some longer term targets there and some shorter term targets. Well, what's the company's focus in the short term? Is it growing the resource, or is it hitting some of those big, potentially very rewarding targets in those corridors?
Paul, the view we take is that the incremental expansion of the resources, we see that as a fairly straightforward opportunity. And we will be doing some work on that. We have to demonstrate to shareholders that, for example, Whistler and Montague will continue to grow. But as we all know, the big step change for a company is making a new discovery. Okay, and we think that that's really what we're looking for. We'd like to think that there's a 500,000 to 1 million ounce type target in there. I think we're seeing indications of that scale of anomalism. So that is a big priority for us. And I think one of the things is that when you do make that next discovery, there then becomes an understanding that if you make one, the second one will come, the third one will come. So that's where the real value lies in building a company. And you mentioned the potential for consolidation. Does Gidgee's location give you options on that front? Yeah, Paul, I think everything you look at, there has to be synergies and there has to be a value add. Okay, I think it was touched on before that consolidation within the West Australian gold industry probably is happening and should happen, but it has to be done for the right reason at the right time. So, you've got to make sure that 1 and 1 makes 3. Thanks very much, Peter. Paul. That concludes our presentations today. Thanks very much to all those who presented for your time. Just before we do move on, just a quick reminder about our annual conference, the Resources Rising Stars Gold Coast Conference, usually held in May, as I mentioned at the outset today, now set for November 10th and the 11th. So all going well with the lockdown. We'll be up there for 2 days of presentations. If you'd like to come and join us, it's free for investors. Please go to the Resources Rising Stars website and register, and we'd love to have you there. It's a great time and a very useful event for investors. That concludes today's presentation. Thanks very much for being part of the first Resources Rising Stars Virtual Investor Luncheon Series, and we'll be back to you with some information about our next event. Enjoy your day.